Good morning, everyone. My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. So, we have started a new year. It is 2022, and I'm excited. I'm excited for the new year. I'm not worried about if I need to go up with the trend or down with the trend. If you watch my previous videos, I've been showing you strategy videos on how to enter, how to exit for trading. I've been showing you strategy videos on how to enter and exit for long to mid-term position trading. And I've been trying to do educational videos to prepare you for if there's a market crash and why I don't worry about it. Is there a recession coming? I've been preparing you with all the historical facts. I'm not worried about those things because I have a system. And the system that I have has a high probability of a win rate. Okay, whether it's low risk, high reward, high percentile, as long as you have discipline and you stick with the system, overall, you will be successful. The system has a lot of disciplines to it. And I teach you that in the Discord, in the Jedi courses. If you haven't taken the courses or you're interested in taking the courses, I have a promo code right now off the Jedi annual membership, which is normally $1,200. It's about $600 or $665, roughly 45–50% off right now. Just click the Discord link in the description below. You can enter for free. You can talk to people. I still help you with charts. I still talk to everybody. I still engage, and I still teach everybody, even for free, just like I do on YouTube. But if you really want really good information on how to navigate the market, short a market, position sizing, tactics, strategies, market phases, just options, technical analysis, everything that you could ever think about, then you just upgrade. And if you just don't want to do all that and learn the courses, you can upgrade to my trade alerts, which there are going to be a lot of trade alerts. And look, it's free for you guys to enter the Discord. And right now I have a 10x Jedi compound challenge. It's in a simulator. You can do it with real money or play money. A lot of people have signed up. We've already started. We started 1 day ago. It goes for a whole year. It's free. I start you with $1 million in the simulator. Okay. And I'm also doing a crypto simulator for you guys as well. You guys just join the Discord, follow the instructions in the announcements area, sign up. It takes you 5 minutes and you guys can start trading today in the simulator, in the challenge. And I will be giving a prize at the end of the year. I don't know what it'll be. Maybe it'll be a bunch of money. Maybe it'll be a trip somewhere. I don't know what it's going to be yet, but I am going to do something, and I just haven't decided what. I'm still thinking about it, but I have a year to do that, and you can enter anytime, so you're not late, but this is the beginning. We only started 1 day ago. It's really fun, and it is free. You guys can do that. Now, what is the secret to winning big in the markets? Well, the secret is to not lose, not lose a lot of money. Lose money the least amount of time. So in order to do that, it doesn't matter if you're right or wrong. Many times you're going to have perfect fundamentals. You're going to be in the right sector. You're going to have the leaders. You're going to enter from the right base. You're going to do everything right, and the market is just going to do something else, even though everything you've been taught is correct. And that just happens in markets, okay? It doesn't mean that you did something necessarily wrong. There could be something that happened in the economic environment or political landscape or news-driven. These things just happen. So you have to have a system, okay? And I don't know if you've ever heard that old cliche, the best offense is a strong defense. Well, the funny thing about cliches is they are usually true. So if you were all offense on a football team and you didn't have any defense, you're seldomly going to win. So yeah, it's good to understand breakouts, and it's good to understand intraday VWAP trading, and it's good to understand trading with the trend, and it's good to understand technical analysis and sectors and leaders and composite ratings and earnings per share and revenue beats and accelerations against Wall Street estimates. And yeah, it's great. You got to know that stuff, okay? That's in my previous videos and in my course. But you also have to play defense. You have to learn to protect capital. And in this video, I'm going to show you some methods that are tried and true and proven, and there's been studies done on them, and they actually saved a lot of people's butts in many crashes, the '08 and 2000. The study was done after the 2000, or right around the 2000. So there was a man. His name is Bernard Botch, and he is a famous stock operator, and he was an advisor to several U.S. presidents. Okay, and he said that you're batting a good average if you're right half of the time. And you can still make a fortune being right 3 out of 4 times. Okay, and in my previous video, I showed you how you can be right 7.5 times. And in the video a couple back, I showed you also how you can be right 7 to 8 times. So I can show you strategies how to be right, but it takes discipline. You have to sit in front of a computer. You have to be non-emotional. It doesn't matter what the ticker is. You have to know when to sell, you have to know when to buy, and you have to follow the system. If you follow the system, you will win over time, okay? Even if you lose some of the time. And when you lose some of the time, you need specific rules, okay? Look, even the most successful investors make mistakes. These poor decisions will lead to losses, and if you don't have these rules that I'm going to show you, they could end up leading to more losses. Look, no matter how smart you are or how high your IQ is, even how advanced your education is, or even how good your information is or analysis, you're simply not going to be right every time. You're just not, okay? It's just the way it works. Once you understand this and you know that you're going to take some losses, but your system provides a higher win rate and a lower probability of loss, all you need to do is have that system in place and be patient and be disciplined, okay? Now, some people think that in order to be successful, you have to either be lucky or be right most of the time. This is simply not true. Successful people just work harder, and they do it more than the average person. They trade more than the average person with systems, okay? Now, did you know that Babe Ruth worked so hard when he wanted to get the home run, the home run record, that he also had the record for all-time strikeouts? Did you know that the Beatles did not get signed by every record label in England before they made it big? Did you know that Thomas Edison tried over 6,000 different specimens before he figured out that one of the many bamboo specimens, after carbonizing it, became the filament for the light bulb? I mean, you have to try a lot. You have to do a lot, okay? You can't just give up. And that's the point. The point is that successful people try harder, they're constantly learning, and they work within a system. They have sell rules, entry rules, and the more rules, the better, to be honest, because the more rules, the more filtering, and the more compartmentalized your pick will be. Okay? So look, as far as selling, if you're one of those people that says, well, I don't want to sell because I don't want to take a loss, you got to get that out of your head, okay? You're already at a loss. If you bought something, if you bought 100 shares for $40 and it was 4,000, it's down $12 a share and it's worth 2,800. Well, guess what? If you sell it, it's worth 2,800. If you have it in your account, it's worth 2,800. Either way, it's worth 2,800. So it might go up, it might go down. Most likely it's going to go down because the market is telling you it's already going down and you should be cutting your losses. Now, how do you cut your losses and what are the rules? Okay, in a bull run, when the market is trending up, whether it's your stock, the market, both hopefully, which it should be, your maximum sell rule is 8% loss. You got a breakout. It's out of a sound base. It's in the right sector. It has the best earnings. Everything is perfect. You did it right. You didn't make a mistake. The market is just telling you it's not right this time. You set your stop no more than 8%, 6, 7, 8%. 8% max, period. Do not question it. Do not be emotional. That is your cut loss. The reason why is because over time, with the strategy that I'm going to show you with a high win rate, with a maximum stop loss, like a maximum loss that you can take, you will have more trades to take to make that money back. So if you're taking a trade that, you could lose 2,000 to make 10,000, okay? So it's basically, a 1 to 5 ratio. Okay, so you can be wrong 4 times and be right once to break even. You could be wrong 3 times and be right 2 times to make money with that kind of strategy. And those 3 times, you need to mitigate your loss at a maximum of 8%. Now, if your stock and the market are in a downtrend, then your maximum loss can only be 3%. Okay, you have to be like mitigating these losses all the time. You'll get stopped all the time, going short and long, but you'll be moved to cash all the time. Can you imagine if you do it the way that I do with a low risk, high reward, trading in the trend with all these different filters, and you basically go up, and then you move your stop, and you go up, you move your stop, you move your stop, up, and then the market comes down, it moves you all to cash with your profit, and you have that going on all your stocks. Now, 3 of them went down, and I lost, let's say, 8%, okay? And 7 of them went up, and I made, say, 15, 20% before I was stopped. That's what you're looking for, an average of a gain on most of your stocks within a strategy. So max loss is 8% on your losers in a bull run. Max loss on your losers in a bear run is 3%. Now, I want you to understand something. It is different when your stock is winning. If you're in the, you have the ones that are winning. So if they go up and you start at 8%, they go up and up and up, you move your stop up. You don't cut when it goes to 8%. You only do that if it's going down. So it goes up 8%, you're kind of put your stop, at even. And then, well, I actually really don't like doing the percentage thing necessarily when that happens. I like to enter a specific way. Let me just show you. So let's say you enter right in here. Okay, you enter here. So I would put my stop relatively right here. Now I like to use the ATR and give myself a little pad because I know how these liquidity wicks can go. But you basically use the swing low or the pivot low. You enter here. This is low risk. This is high reward. See what I'm saying? So now as it goes up and it has a little bit of down days, but it didn't stop you out here. Well, now you just move your stop. You just move your stop up to here. So you bought in here. It's low risk. You have your stop there, and you go. Gets a little nervous, but it kept going. So you move your stop from here to here. Now you're again at low risk and profitable. Okay, you're heading up. It almost stopped you out. It almost stopped you out. It almost stopped you out. And you go and you go and you go. And off you go, and boom, 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 it didn't stop you out, so you can move your stop again up to here. Okay, so you moved your stop, you entered here, low risk. It didn't come down and stop you, so you get to move your stop. It didn't stop you, so you get to move your stop. It comes back up, and you make a new stop. Okay. There you go. So you've gone all the way from here at 305, and you've made it over here to 370, and you haven't even been stopped out by using the stop rule on your winners. Now, as you go up, there is another stop right here. Okay. Now it did not stop you out right here. See how it went up and it came down, it created a pivot low, and then it went on back to rally. So you moved your stop from here to here. Now, as this falls, it stopped you out. It moved all your money, okay, from $399 from 305, okay? So just call that $95 gain, and all your principal moved to the side on your winners. Now, if it goes down and it comes back up and it breaks this area, you can re-enter with another low risk, and you can repeat the whole stop process going up. Okay, but let's say you had something like this, okay, And let's say you entered right here at 285. Okay, well, let's just mark that green for now. So we'll say that you entered right here green. Oops. Okay, yellow. We'll call it yellow. Sorry. So you entered right here. You didn't know any better. Okay, you like PayPal. You're thinking it's going up, but if you take my courses, you know that you're in a downtrend. You're making lower highs. Like, there's all kinds of things that tell you this is going to come down early. Okay, so, but you didn't know, let's just say, and you bought right here at 285, and, you know, let me get a calculator because I actually don't know. So 285 times 8% means that you can go down relatively $22. Okay, so let's just do 285 minus 22 bucks is 263. Let's mark that one green at 263, which is right here. Okay, you took the trade here. The maximum that you're willing to lose is here. If you didn't have your maximum stop loss rule there and you didn't have a stop, well, you could have lost all the way from, instead of losing 22 bucks, you could have lost from 285 down to 188, $97 instead of $22. So the reason this is important is not only to save you from losing your butt and losing $97, but also to mitigate your risk so that you have your money for another trade. You're not going to win every trade. Okay, remember, like I said. Now, here's something I want to tell you. Institutions have a lot of advantages over you. Okay, they just do. They have a ton of advantages over you and me. But this is an advantage that you have over them. Now, institutions buy heavy, okay? And you'll learn about accumulation and distribution in my courses, which is critical to understand if you're even going to be in the stock market. If you don't know that, you shouldn't even be like trying this kind of, like even being in the crypto or stock markets. But you have this major advantage. Institutions accumulate and they buy heavy, and they have hundreds of millions or even billions of dollars worth of shares. Now, they can't get out at an 8% rule. It's too big of a size for liquidity purposes. They cannot get out in almost all cases, but you can as a retail investor. So you have the opportunity, no matter what the market's doing, to have your rules and to cut out and mitigate losses and hold on your money. And you also can run your winners with stops up. Successful traders cut losses early, and they let their winners run, and they let their winners ride all the way as high as they can using classic stop rules. Some people, another strategy that you can use, I don't necessarily do this myself, but it is a sound strategy and it does work, and it is quite smart actually, is let's say you were willing to lose 8% on your stock. Well, what you could do is if it goes down 4%, you would cut half of your position, okay? This mitigates even more losses because your position's in half. And if it does get here, you mitigate the other half. You get rid of the other half. I don't like to do that only because, and it is very sound advice, I personally don't like to do that because if it's coming down and I cut it here, I automatically have a wash sale. And if it decides to bounce back up, I can't scale in and buy more without paying a premium on the shares. But that is very good advice. Now, if you cut your losses at 6 to 8% because you have a strategy, right? You have a defensive package, right? Like a football team. Imagine always cutting at no more than 6 to 8% loss. You're basically like a football team that no other team can move the ball against, okay? Because you have a defensive package protecting your quarterback, okay? Now, that's discipline, guys. And I want you to know that there's no emotion here. If it drops 8%, you're out. It doesn't matter about waiting till the end of the day or thinking it's going to rally or what is the theme or what is the story. It doesn't matter. You have to follow the discipline. You have to follow the rule, okay? You got to remember that all stocks are risky and speculative. It doesn't matter if it's a blue chip. None of it matters. It helps if it's got good fundamentals and it's a blue chip, and it helps, of course. But what really matters is trading with the trend and having disciplined rules for your winners and your losers, period. And you got to be non-emotional. All right. You just got to remember this, like, no matter how much you love a stock or crypto, you have to know that the market does not care what you want. It does not care what you feel. It does not care what your opinion is. And once you understand that, you're in a better place mentally and psychologically to win. You know that you're not going to win every time. You're smarter psychologically. You have a rule. You're smarter psychologically. You're disciplined. You're smarter psychologically. You're working with a system. You're smarter psychologically. You understand trading with the trend. You understand the market phases. You understand fundamentals. You understand earnings per share, hopefully over the previous quarter or a year ago. And you're also revenue beats annually and pre-tax margin. And you're understanding, products, services, management. You're understanding all these different things, sectors, leaders. You're understanding all that. That all goes in to choosing the stock, which is critical. Then trading with the trend, okay? And then having disciplines and the strategies to protect your capital, to mitigate your losses, and to let your winners run, and to do this, annually. You do it every day, but you do it annually, and you'll watch your returns in your portfolio increase. Look, if you're one of those people that thinks, okay, it's only down a little bit, I'm going to hold, it's going to rally back. Why? Why do you think it's going to rally back? What makes you think that it's going to come back? In 1964, AT&T was worth $75. When it dropped, it took 20 years to come back. When Microsoft and Intel in the 2000 dot-com crash went down, it took 10 years to get 1/3 of your money back. In 1929, if you stayed in, it took you 25 years to get your money back. Okay? You got to understand that. Not all businesses survive a crash or a recession. A lot of them go bankrupt. Look at Circuit City. Look at Sears. Okay? General Motors was another one. General Motors went from $94 down to $2. I mean, how many thousands of percent is that? I mean, that's insane, guys. So don't ever think that they're going to come back, Just have your rules to get out. Have your rules to enter. And, have a sound system with proper entries and exits, like I said. Subscribe to the channel, like the video, make a comment on what you like, and get in that Discord and do the compound challenge with us for free in the simulator. And once you do that and you do the courses, start doing it with real money and start making real money. Start making hundreds of thousands of dollars or millions of dollars with a system that works, okay? Now, these are real solid systems. Out of 50 of the best systems ever created, there was a study done every year for 12 years, and the S&P averaged 14.9% over those 12 years, and this system averaged 2,763% over the same 12 years. Out of the 50 strategies, it was the #1 strategy all 12 years in a row. I know what I'm talking about. I study from the right people. I'm a big believer in strategy, structure, process, tactical moves, entries, exits, trading with the trend. I understand all this stuff because I have a large account and I don't mess around with losing hundreds of thousands of dollars in one day, which you can very easily with a large account. So you got to have structure. And I teach you this stuff, and I teach you how to be mentally prepared and to choose the right stocks and how to enter and how to exit, and how to protect and how to position size. And I teach you all this stuff in the courses. So click that Discord link. You can get in for free. You can meet people. You can ask about the courses. There's no harm in that. You can do the Jedi Challenge for free. There's no harm in that. And if you want to excel your learning, investing, and trading journey, click the Start Here button and go to subscriptions, and you can upgrade, okay? And if you upgrade within the next 2 days from this video, you can use the code SANTA, S-A-N-T-A, lowercase, and get 50% off, okay? And I really appreciate you watching to the end. I hope that you learned some things in this video. And do me a favor, please like, subscribe, and select all, make me a comment, and I really appreciate you. Welcome to the Wheelhouse.